Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So today, finally, Big Ben got on the Hill and spoke. He didn't say he was going to abandon QE, but he definitely said they're up to some type of tapering. And then the minutes also kind of reiterated it, and everyone had their debate back and forth. You know, the bottom line is we've been in a very strong trend. We've had a big macro trend, we've had an intermediate trend, and then lately we've been in this accelerated trend that's been driving everyone a little bit batty. So what goes on when you get a big event, if you have a key inflection point? What we saw was a push through the prior high, which we list the pivots every day, and I'll show you where if you were short and you were cost averaging it up and you were rolling it up for months, you probably finally threw in the towel there. You know, and then if you were also waiting to be long, you might have said, oh, I got to get in now. And then what we did is we pushed through, came back below, and then later put in a lower high, and then we closed, you know, a little off the lows of the day, but we did something different that we haven't done in a while. We had a really, I would say, potent outside day, potent red dog reversal, a day to take notice. And over the course of this year so far in 2013, these type of days have not led to much downside follow-through. But you never know what it's going to lead to. So if you clean up positions, you get out of some longs, you test some shorts, you create a little flexibility. It doesn't really matter where it leads to if you do the right type of trade. And if you look at the chart here of the SPX, you will see here is the trend that's been intact since November low. If you're a macro trader, does not matter for you. Here was, more of this accelerated trend, okay, that we pretty much touched today, okay, and then here is your really accelerated trend line that, we broke, okay. As far as what is a red dog reversal, because I'm having a lot of questions asked about that, I'll go right here. Okay, this is just this portion of it. Okay, what it means is once you push through a prior high, anyone that's been short this, indice, the spiders, has not been getting much, hasn't been getting rewarded. And maybe they said, oh my goodness, I got to cover. They cover into it. Okay, then you have people who've been sitting on the sideline saying, oh no, they're not going to stop QE. We're going to 1700 in a straight line. They get in, then you reverse. So what happens is everyone who got short gets a little upset, or who covered them has said, oh my goodness, I just covered at the top after maybe rolling it up from here or rolling it up from here or whatever the case may be. Let's just iron it out right here. So the bottom line is, this was the move. And you could have, as an active trader, made some decent money when it went back below. This was the pivot, 1674. And, the size of the travel range was pretty robust, from the highest to the lows. So that's why right around here, towards the end of the day on the VTF, I'm like, I probably wouldn't press into here, wait for a little snapback. But overall, this is, a pretty potent day. Okay, we've had this potent type of day a few times where, here was your potent day, the next day engulfed a portion of it to squeeze some shorts, and then we continued a little bit lower. We had this type of day here where I actually gave you 2 days, okay, and then came back up and continued lower. But all these days have been matched with buying. But this time it's from a little bit more of an accelerated level, okay. So we'll see now, can it stay on the right side of this wide range bar. So we'll see how much of it can the sellers control. So we'll see if the sellers can keep, it from a bounce back to probably right around here. Perhaps we then roll lower, and then we see a move to the 21-day moving average, which wouldn't be such a bad thing, even for the bulls. Same way like we came to the fit. We've only tested we've tested 21-day actually a few times as we kind of rode it from here. We tested it here, we tested it here like 3 times. We only tested the 50-day once. And the 50-day is all the way down here. And that would also kind of be in conjunction to this last breakout, which would be, it looks like a big pullback, but this is really nothing in the scheme of just where we came from in 2013 and then obviously where we came from way back when. So all in all, this is all today is. So depends on how you look at the market, what time frame you look at, and at this point, this is one of those cleanup type days, and then see what it leads to. If all of a sudden we hold here, we go sideways for a little bit, nothing falls apart, then we're going to have to get back in longs and continue, kind of like what happened a few times. Remember, this broke, gave you about a 3% pull-in. We rallied up, okay, and then you held sideways, and then we took out this pivot. So this wasn't really much of a pullback. Same thing happened here. We broke through this prior high, pulled back, held the 50-day, bounced off it pretty quick, went sideways and went again. So the question is, what type of bounce do we get? And we measure that bounce, and we think if we could re-short that bounce, and then if we take out this level, then perhaps we get a little bit more of a pullback. So a lot of people on Twitter were like, Red Dog, was this the highs of the year? You know, a lot of people like my probability of whatever. I would put my 70-80% probability that today's high was not the high of the year. But after the type of move we've seen this year and since November, you know, I would love to see another 30 handles to the downside over the next, you know, weeks to months. You know, I'd love to see a test of the 21-day, the 50-day. I'd love to see some volatility, some trading, because the slow grind has been a little bit difficult. Now, if you look at some sectors, you'll see the same type of pattern happened, you know, in a lot of spots. You look at the XLF, same type of thing. Okay, we're going to go over a lot of this in the morning call tomorrow. This is, you know, the last trend that actually this is still above, but you go into this little accelerated guy. All we did is come to the 8-day. It felt like such a big correction. Everyone was like saying the world's falling apart, but meanwhile we just went back to the 8-day. That goes to show you how extended we were. Okay, so same type of thing. What type of bounce? I'll write down levels tomorrow of where this bounce should get contained if we're going to get a little bit more downside follow through, you know, to buy the 21-day moving average, which would be nice, which would be something that I think a lot of people would love to do, refresh their longs after a huge move. Look at the homebuilders, XHB. You know, that's an engulfing bar, big engulfing bar, engulfing this little upper range, even on Toll's good numbers. This is already below the 8-day, so this is acting a little bit weaker. We'll see how this handles the 21-day. Go to the Russell, see here. This, you know, is just, look at the size of that bar, okay? Showing you definitely some looseness and some volatility, and you look at this accelerated trend, and it just broke it. Okay, came a little off the lows. Here's your new point of reference. Kind of broke through the 8-day, which it hasn't done in a while. Something different. But look at the last time this did this here. It just engulfed it and went. I think a lot of traders would be very pissed, excuse my French, if, you know, if this rally or if it tries to bounce back doesn't get contained here, because we'd like to see a little bit of downside follow through. Let the trade change a little bit. You know, you look at let's see, the IYTs. This too. Kind of negated this upper range from the last time it broke out, or this little upper trend. And right here, if you had a high level stop, you get out of the way. Now, you know, maybe see how it handles the 21-day. This already was a little bit weaker, gave up the 8. But, you know, we've seen this a few times. Again, you know, when this broke here, at least you had a week of volatility to the downside. You know, then when this broke right here, you had 3 down days. Remember those? Okay, and then you had your red dog reversal and bounced back, retested, came back in, and then, you know, this is when it broke this. So, you know, here's all we are at. So with that said, I'd like to see a little bit more downside, to be honest. You know, Apple did hang out and hold up a little bit well, you know, a little bit better today. I would say, you know, as far as from where it came, you know, this is, you know, still building. We talk about how long it takes for this type of pattern to build. It would be nice to see if the market does retrace and come in, if this could show some relative strength, sort of like it did today. Maybe it could get a little bit better and take this out at some point, but as of right now, it still, you know, has a lot to prove. You look at, you know, like the financials, just Goldman, you know, just to show you entries and exits. Here is your descending channel. Here's where it broke above. This is when we listed it off the charts, and then here is your big topping tail. All right, pushed through. People chased it, came back below. And now the question is, we could look at this for, you know, for some clues on if we get more of a pullback. This didn't even get to the 8-day yet. So tomorrow, if this were to open up, maybe we get a cute short through the low, hit the 8-day, maybe even try and work its way down to here, which would be, I think, appreciated if that happens. Anyway, you know, you look at something like Google that's been, you know, best in vogue or best in breed. Here is, you know, your core entry when it broke this descending channel. Here is when it retested and then went again, and now it sort of broke this upper area and, you know, it came to the 8-day. It's the first time that it's actually come back into the 8-day in a while. Hasn't even hit the 21-day for a while. So now we'll see. We have a new point of reference. If we were to break below this, I'd love to be a buyer of Google this time around the 21-day. You know, let's see if we can get some more of a retracement here. You know, Priceline closing the dead lows yesterday, gave guys follow through if they took it home. You know, it's just funny the way these analysts work. I think, you know, on Monday it got upgraded. Okay, so this was your squeeze on the upgrade after, what, a 100-point move. Then you had your outside day yesterday. and closing the lows. So the good book says this is your king and queen's topping formation. Some guys who've been betting against or wanted to bet against Priceline, here was your invitation. Then you got paid. Closed near the lows, and now it's only at the 8-day. So we'll see what happens, but just goes to show you that you can't trust these upgrades or downgrades, especially after a big move. Same thing with Microsoft. Microsoft was downgraded at 29 right here. Okay, wasn't it downgraded right there? Boom. And then I think the price target got upgraded here. So, I just tried to tweet and say, I wouldn't be a buyer above 35 on an upgrade considering the size of the move. And now, it's come in a little bit, and we'll see if it can go sideways here. But again, you just have to learn how to, manage your expectations, manage your entries, manage your exits, manage your hedges, manage your time frames. There's a lot to manage. But you got to figure out where it is you want to live. At this point, I wouldn't be going out and selling your 401ks or your IRAs or whatever it is. I would be saying, okay, great. If you're an active, trader that goes home flat, maybe you're thinking, a little bit more, short side, for some continuation. If you're trying to be like an active swing and you took off your portfolio approach into the red dog reversal and now thinking I want to be net short, you know what? We got to make sure that today's bar, can't get negated by more than 50%, because that would show you that today was a little bit emotional and doesn't have the same force. So there's a lot of things to think about, in the scheme of it. And if you are just a active swing or more of an intermediate swing, map out the 21-day moving average, because if some of these leaders get there, that'll be something that maybe you could put back on, especially if you sold into strength or if you had high-level stops, as you get some type of day like today. So all in all, this type of day is what we call a day to take notice, a day to clean up excessive longs. If you were holding 8 to 15 positions and you're like, oh my goodness, I don't know why I have so many things on, but it's been working and trending, maybe you get down to half of them or less than that. If you've been looking for a reason to try and get short versus just using opinions, today's one of those days where it gives you a reason, and then with the next few sessions you'll figure out whether or not the reason is validated. So then, that's what today is. So today means a lot of things to different people. So figure out what it means to you. To me, it shows that we're going to be able to hopefully trade again. We're going to get some two-way action. We might get the opportunity in the next coming weeks or months to buy back quality stocks more on the dip, closer to the 21-day or the 50-day versus paying up extended from the 8-day moving average the way most things were, which made it hard and frustrating, as of late. So lots going on here. It's only Wednesday. We still have 2 more days before Memorial Day. Hopefully you guys did pretty well today. There was definitely a lot of action both ways, and I'll see you at the morning call with Brittany. Have a good night.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.